Hi, it's David here with Futures Trading. I'd like to welcome you to the channel. We're going to cover the chart scale today. I want to answer a question for hopefully is a subscriber here, but I definitely want to answer this question nonetheless. And again, we're going to get into some real-time information. You have the universal threshold. So this is how far the live candle will pull back before resuming the price action trend. You just need to be able to count to at least 10 in order to get this to work. And this is the price action method. I use the majority principle, and it states that the minority is compelled to follow. So I'm going to show you three different ways to find that in the chart. And then, of course, that universal chart scale, we're going to cover this hard right edge. All right. It's all about that. And I'm going to show you how to look at the hard right edge and know that the market can become cyclical without having to look hindsight. If you're in the market for additional information, I have that as well. I did a lot of live trades here for you guys. And of course, there's tons of other information here far beyond the scope of what I'm covering here on the channel for free. The free information is all you need to get consistent in your trading. I do believe that it's the foundation to anything else that I teach. So, really important that you take in the free information. But again, I have other information if you're in the market for that. If you would like to have access to those videos, you can get half off the private access as well as the indicator suite. My indicators work on the free version of NinjaTrader, so you can still place your trades on the platform of your choice and just chart my tools on that free version if you're in the market for that kind of information. That's all it is, just information, having an additional opinion on your chart by me. All right, now I'm not a programmer. I want to say that I'm an educator and a trader. All right, so I do the best I can with coding. Thank you so much, you guys, for uh, giving the 1% that the channel actually needs in order to stay active. All right, because we need to make sure that there's some support there. I'm talking to an audience. I want to make sure that the audience is listening to me. That's kind of why I went away before because I was getting views and likes, but then it started to drop off significantly, and so I don't want to bring you content if you're not interested. All right, because I don't want to waste your time, nor do I want to waste my own. All right, so we're going to cover that chart scale. Let's see, can we keep this up to 1% per video? Let's see, can we do that? Again, if we cannot, then I absolutely will take a break and I'll just come back at a time that's more convenient. But thank you so much, my friend, for coming on board or at least stopping by the channel. And yes, the chart scale, I'm definitely going to cover that for you. Yes, it is gold. If it's applied, yes, it can absolutely make a difference. And Randy, yes, my friend, that hard right edge, that's what it's all about. And I'm so glad that you are retaining the information. It's really important that you do that, and I'm so glad that you're here. Jimmy, thank you so much, my friend. I'm so glad that Jimmy is here. Jimmy is a part of our private community, and we're excited to have him on board. All right, so again, I'm going to get into this information. I don't want to hold you long. All right, so this is what the thumbnail looked like. Okay, let me show you that thumbnail so you'll know this is what we had going on. All right, so this is what we had going on that video. All right, on that video there, you can go back and take a look, but I'll try to catch you up. This is that thumbnail. All right, this is where I left off. So it was right here. All right, so it was right here is where I left off. I kind of removed some of the other stuff because it's showing up on my compressed chart, and I'll show you what that is. I didn't want all of this text and stuff on that chart, so I kind of removed some of the arrows there. But as you can tell, it's the same information. All right, so we had that decline here. That's that decline there. We had that lift up here. Okay, and that's that lift up there. Then they had that drop. They had that drop, and then of course that lift, that minor lift there. That little push down. That's that little push down. Then they went up. And they went up. All right, so now you can kind of already see they went down. I'll show you that as well. Let me just kind of scroll this over. All right, so now, oh, let me scroll just a little bit more so you can kind of see that as well. All right, so not that far. I'm gonna go about right here. That's good enough. All right, so yes, so that's what it ended up looking like. All right, now this is the thumbnail to that video. And I said in that video, it was at 1 o'clock p.m. Eastern Standard Time. I told you that the market would need to close above this price here by the end of day. Right? I kept saying it. I said, let's see if they can, close beneath that price. Let me kind of get that out your way. All right. So that's the text and the little box that it had pulled into. And by the end of the day, they kind of just hung out up there just a bit, but then of course they managed to fall down before the the new day came in. So the new day right there was June 1st. All right, so they managed to drop down away from that price level. All right, and I told you guys at 1 o'clock. Let's see if they can close above that level by the end of day. I used to shoot videos some time ago and used to tell you guys by the end of the day, I can tell you what price the market can potentially close at. All right, by the end of the day. Really important information. Really important information. All right, so these are the time ranges. If you're interested in range trading, I do have a couple of them for you. And then a part of my private community, there's two more additional ranges that I give you. And this is on Bitcoin. So now let me take you to the NQ and let you see that. And then we're going to go to the real time chart and I'm going to show you what we're doing with the chart scale. All right, so this is, of course, the NQ, and this is what they've done. They had a big rally off 9:30, and then that massive decline there back down, I guess at 10 o'clock, 10:03, somewhere in there. And they managed to climb themselves back up in there at the upper part of the chart. All right, and then I think on that last video as well, I looked at the NQ with you guys, and it was here. So they were right. Let me see, can I get to it before it gapped down? They were right there. All right. And I told you guys, I do think that they can go higher as long as they can hold, that rally back there. All right. So, and well, they held it. They just managed to drive down really significantly, and now we're up higher. All right. So that's in that video as well. All right. So now let me just get rid of this. All right. So now let's go here. Here's the NQ. Now, my friend, with the question, all right, I want to make sure I satisfy your question. Let me put that back in view really quickly here. I want to make sure I answer your question. All right, and please I keep hearing center of the scale or chart and most of the videos, but can't seem to get the video as to how it is derived. All right, I'm gonna show you in this video how I'm coming up with that. I'm gonna show you so you can know. All right, so all I'm doing is, and it's really, really simple, my friend. I'm using the bezel. So I'm gonna scroll the candles forward. There's nothing over here. Seemingly, I have eh, but what's happening is the market is always going to turn in front of you without you having to look left. And here's the thing that makes it very simple is that this frame was given to us by the broker of, well, the platform of your choice, that you're using. And so the information here it has to be plotted in view. So it must show up in here. And so from up here to down here, uh, somewhere in here, it has to show up. All right. So it's not necessary to look left. And so all I did, and it kind of makes sense, if this is an environment of choices, clearly it's a decision place, and they would like to tell you that it's a game of randomness. But we know that one particular party or the other at different moments will win. So let's do a coin toss, if you will. A 50-50 is how we should approach it. Now, I give more details, in the private lessons of how I derive at some of these other things that I'm showing you guys. But here, let's just do the 50-50. And so we're going to divide this in half and say, hey, well, if the Bulls can keep it going, let's keep them up here. And if the Bears can keep it going, let's keep them on here. So let's just treat the center of the scale like the coin. That's it. And then, of course, we're just going to mimic that same behavior given that they stay above the middle of the scale or below the scale. We just divide it one more time because it must turn in front of you. All right. So the market absolutely must turn in front of you. All right, so I'm gonna leave those lines there. All right, and just leave those there, and we're gonna kind of get a couple of our own. I'm not gonna add the chart scale to it. I'm just gonna throw a line in here. All right, I'm just throw a couple lines in here, and I'll move them around so you can kind of get a feel for what it is that I'm doing. All right, so and that's pretty much it in a nutshell, my friend. So that's how I'm deriving these levels. And the thing about it is, let me leave that blue. I'm gonna color these. I may have to dial down to something a lot smaller for the sake of brevity because I don't want to be on here long, and I definitely want to give you what it is that you're interested in knowing. And so let's do this. let's just kind of, I don't know if they'll get all the way. I doubt it, but I'm gonna put it down here to say the least. I'll just go ahead and do that. They should be getting ready to turn back up here. They should. They should. They may drop under that pivot, and I'll tell you where I think they may go if they don't want to turn right now and just get back up. I'm gonna tell you where I think they're going. All right, because remember they're still in the upper part of the chart here. Well, the mid part of the chart. They're in the mid part of the chart still. Let's give a couple patterns that, well, majority patterns that we're looking for. Let's find the all-in-ones. Let's do that. This was an all-in-one. So we had the wick, no wick. That's kind of fun, big wick, little wick. Body can fit in there twice. The midpoint is above the high, so that's all there. Let's see, can we get us another one? Here, here's another one right here. All right, so big wick, no wick on the bottom or a little wick, and the midpoint is above the high. So all of that's there. The body can fit in there twice. So that's majority, all three of them. All right. So that's all we're looking for. We're trying to here's another one. Here's another one. Oh no, I'm sorry. That doesn't have the color in that bar. You have it off the bottom. Okay, so we have it off the bottom down here. This wick is a little bit bigger, not significantly, but it is bigger. And that body can fit in there twice. The mid is above the high. So you have that there. All right. And I do understand they failed from up here. You kind of had that here. You had the big wick, little wick, midpoint falling beneath the low. The body can fit in there twice. You had it here too. They kind of stalled out. Now this is bad. You had all of it here. Okay. And they fell under it. That's just bad. So but it's okay. They can get back up. They can. It's a trend here. So now let's count our trend while we're doing that. I want to make sure I cover everything that I possibly can within a short amount of time. Come on, come on. All right. So I got a lot of charts up, and different things. All right. So 1, 2, 3, 4, 5, and 6, and that's 7. All right. So they all must be higher than the prior. All right. I must say that. All right. So any candles that's in between, do not count them. Please, people, please don't do that. The market is not progressing. You need it to progress. All right. And once it progresses, then start counting. Say, okay, well now you're actually going somewhere. That's the biggest problem with traders that's looking at a bunch of different tools. What can end up happening is you're being distracted by the fluctuations instead of maintaining a level of focus until the chart actually show you difference. All right, so wisdom is the study of difference. All right, so you got to make sure you're looking for something different. What is it doing that it wasn't doing before? Okay, you're not making any progression to close lower or higher. You're not doing anything. You're still doing the same thing. And so what ends up happening is you're getting distracted and kind of wrapped up into what it's already doing, that it was doing before, and not something different. And that's not what we're looking for. We're looking for it to actually move. All right. So, and that's what you have here. They're kind of coming into it again with all of it. So they can get back to it if they so choose. I do suspect that they need to do it now. If they're planning to get back up there, they need to get to it now, or we may have a potential problem on our hands. Now, I do like the I like the threshold on the colored bars. So let's just kind of do this. Let's see if they close beneath that threshold. Not yet. We don't have to go as far either. So we can go right here if you want. Okay, you can go right here. They kind of dove in that. They may come back out of it. I don't know. Or they may come into this one from above and push down lower. All right, so let's kind of drag, yeah. And see, the pressure is firing off, saying that they may go down right now. All right, so this is telling me that the midpoint, this is a part of the indicator suite, the colored bars, the IN, which is the increase, is trying to find the big wick, smaller body, bigger body effect, that the IN, the increase indicator, is trying to find that. Okay, and that's saying that the midpoint is beneath this low. Now, if that be the case, this bar right here is going to end red, and that would lead them here. So let's do this. All right, now I'm going to give a take here. The bar is not finished; it's still got time, but that'll put them right about there. All right, an estimation there. All right, so that's what we're trying to do with the candles, the threshold of the bar. Now, clearly, they fell out of this, so that's not going to work. All right, so that's not going to work, and that's fine. That's fine. All right, so we give a take, give a take. We're going to give a take here. They should get to right about there. So they should get there. Now all of it is here. All right. So the big wigs, smaller wig, that type of effect there. And they had it off this bottom. I did tell you that. They had it here. I know it's kind of really small. This threshold is like really small, but I'll pull it over there the best I can. That's down there. You get it. All right. So they can go back up. I'm not going to tell you that they can't. They kind of got it all here to send it down. Let's see if it's going to actually respond and go down. I don't want to be up here long. All right. I just want to say that to you. I want to give you what you need. But the chart scale, my friend, that's what this is. All right. And that's all I'm doing to the information. And it's in front of the candles. You don't have to look, hindsight. You don't have to do that. You could just look right here and watch the market move. I've been doing this for a very long time, and it's quite simple to trade. The only thing that you will probably run into when it comes to trading, once you learn this information and it becomes fundamental to you and very foundational for you, you would probably need more understanding about some other things that's happening on the chart. But again, find an educator that you're, of course, wanting to learn from. You don't have to go with, the information here on the channel. Again, everything I'm providing is free and it absolutely can stabilize your trading. But I want to tell you that this is just foundation. All right. I want to say that to you as a disclaimer. Like, you're going to want to learn more about your trading. I do encourage you to invest in yourself, your business, because trading is a business. If you're filing taxes, is a business. If you haven't gotten that far, hopefully the information on the channel will permit you the opportunity to do so. But this is foundational. So everything I'm covering is just a base. It's a base. Okay. It's just a base that you can build on. But I do suggest you learn. There's some other things going on. All right. That's all I can tell you. Some other things going on that's really simple, just like the things I'm showing you here. There's some other things going on, and I would encourage you to just further your education beyond what's free. Most people don't do that. They just come to the channel and they go what's free, and they feel like that's the safest way to secure their finances. I argue that that's not it. I spent a great deal of money and time learning far more than what's on that playlist, that private playlist. I can assure you, I know more than what's there and what's here. You will want to learn more. You would, because there's some other nuances to what's happening with this movement that they're putting out, and some other things that's going on. All right, so we don't have a trend down. I just wanted to say that to you. One, two, three. That's four. Yeah, we just still have four currently. So we don't have a trend down yet. So yes, they can turn right back around and still get up here and make this distance here up at 54.55, somewhere in that area. And clearly, if they get there, they're going through the high. It's just that simple. We have all the components showing up again. All right, for the upside. They didn't want to make this. Okay. They didn't want to make this. We got all the components to go up again. All right, so here's another shot at it going up. All right, so let's see if, and again, I told you they need to go in and get to it if they're going to go up. If not, we may have a problem. Now, one would say they offered it to you in here. All right, so it's not to say that it didn't show up for this pattern. All right, it's not to say it didn't show up. We want it from here though, because that kind of just makes for a better experience if we can get it from here to here. So that would be fun, if that had happened. But here you got the bigger wig, smaller wig. The body can fit in there twice. The mid is above the high. All the components is there. All right. Now, what I like to do, and this is just what I like to go off this bar, but sometimes you have to go with this one. Just sometimes you have to go with that one. Now I'm gonna put it on both. I'm kind of sitting away from my computer here, but I'm gonna come up on it just a bit so I can see these lines because I really can't see it from back there. All right. So it's gonna be one or the other. Could they hold this and then come back down and make that distance? Yes, they absolutely can without blowing the back of this pattern. You can look up here in the upper left hand corner. What is that pattern? What is the high of that? 380.75. What is this? 379.75. So they came within, like, yeah, okay. All right, let's go to something smaller because I actually want to read this faster for you. All right, so I'm gonna kind of leave everything in place so that way if we go back to the 1 minute, you could still see that information being played out. So let's see, can we go ahead and knock out this 5 second chart? It's really simple. I just turned to it. So it shouldn't do anything other than what we were looking for it to do on the other time frame. Here, we're going to go with the middle of the chart being here. I'm not going to draw nothing really, really big here. And then, of course, the upper part of the chart is up here. Give or take. We're going to give or take here. All right, so give or take. They went into our threshold. Let me just kind of color these though, since they're on this chart. I'm gonna color these. Come on. All right. So okay, so they look like they may want to do that distance. All right. Now keep up with the things that I just said while I outline your chart scale information, because the chart scale actually moves. But the goal of my image that I give you guys actually with your indicator suite is that it doesn't move. All right. So I'm having to adjust these zones, if you will. But the image that comes with the chart is stationary. So it's static. It will not move. So even though the chart will move, the lines won't. Okay. I'm not gonna worry about the one down here. You kind of get it. They can come here, they can possibly come here, turn around and go right back up. All right. Now they don't have all the components on this one because that bar can't fit in there twice. But that's not bad. They're trying to lean over. Let's see if they can come to the center. This is the center of the chart. All right. So we're looking for them to respond here. Okay. We're just looking for them to respond. Let's see if they'll respond. Let me put this other half down here just in case they want to actually drive down here. Let's do this. All right. So let's just kind of slap this in here. And this is a 5 second chart. All right. So it doesn't matter the time frame, doesn't matter the asset class. It has nothing to do with that. All right. It's all about just reading majority. All right. And again, the majority is the big wick, like they're doing right now, currently, right now. This is what they're doing. The big wick, no wick. That's pretty good. The mid got above the high. Now the body can't fit in there twice, unfortunately, but you had all the components here on the bottom. Right. So all the components came in at the center of your chart. You have the big wick, bigger than this wick. That body can fit in there twice, and that mid can get above that high. All right. A lot of people online, they're chasing, other information that you do not need. It's not required. Why do we need that gap there? Why we need that third bar? You can know that that gap is going to show up if you trade majority, because it tells the minority that they're compelled to follow. Been trading this a long time before there was ever any kind of ICT or anything of that nature online. All right. It's just the principle of majority. All right. That's all. That's all. It's a principle. This market has to move based on laws. Okay. It's this stuff is not, it's not abstract. It's not doing what it wants to do. It has to do what the market is telling it to do. All right. So what the market is telling it to do is by when the participants show up and control the environment. All right. So who's in control of the environment? Who's dictating the price level? All right. So when they place their orders, if they plan to send the market up, when I say they, the institutions, any kind of entity that's in the market operating with a great deal of capital and know which direction they want to send price, they can change the direction of the price. All right. And so the majority, the principle itself, okay, it says that the minority is compelled to follow. It's compelled to follow. All right. We live our lives based on principles. Most of us should, and that's rules for human conduct. All right. So now when you go into the chart, it's humans trading. All right. And so there's behavior associated with this. And again, because you have a thought, you have the end in mind. And so when the institutions begin to place their trades, they're programming their algorithms based on ideas, things that they would want. So by the laws of that, and how life works, we pursue what it is that we're interested in. All right, and that's all it is. And so when you come to the chart, you should view it in the same manner. And so they're at the upper part of the scale. Now I'm going to give a take here, people. Give a take. Let's go here. Let me move it up just a little bit. That's the only thing I don't like about having to draw this up here, but I want to show you what it is that I'm doing. And again, this is a coin toss effect. That's all. It's really simple. Don't overcomplicate this. Please don't overcomplicate this. It's not to be it's not to be. It's meant to just be simple. Don't make trading hard. It's just choice making. That's all it is. And I'm just trying to show you guys how to make better ones. All right, so let's go back to our 1 minute. You see the 5 second. Let's go to our 1 minute. All right, so the 1 minute here. All right, so yeah. So the 1 minute here, they're almost at that distance. Now, once they make this distance, I must go. And again, this is very simple. It's not complicated, and that's how I'm coming to the chart scale effect. That's all. It's like a coin toss. Two parties here is opposing each other. One wants it to go down. One wants it to go up. And at any given moment, because it's fluid, at any given moment, that can potentially be the case where one party wins and the other doesn't. And of course, they must do this in frame where you have to see it. So you don't have to go and look left real far over here to wonder what's going to happen right here on this hard right edge. Just look here and know the fundamentals of what's here, and that's what I try to explain to you guys is the fundamentals of trading is majority. That's all that's happening here. And majority what tells the minority that they're compelled to follow, and because they're controlling the outcome. All right, so they're the ones that's in control, and you got to be able to spot it in the chart. So it's not about open highs, lows, and close. Again, I didn't mention any of that. Okay, it's all about majority. So what does that look like? And now you know. Okay, so when you look at your chart, you understand what's controlling it. All right, it's reference points to talk about highs and lows, opens and close. That's just a reference point. But when you get behind the function of how this works, which we talked about procedural knowledge in the last video, so it's really important that you approach this just like any other profession that has procedural uh, rules to how they function, and so you want to come to trading and exercise the same. You don't want to do what's random. Okay, you don't want to try to set yourself different by using different tactics and indicators and all. No, you don't want to do that. You want to first outline what's the functioning thing. What's the thing that's causing this chart to actually move? And that's the thing that I'm trying to make sure I unveil to each and every one that visits the channel, is that you got to first understand what's behind the function. We can go down that rabbit hole of order flow if you would like to, but at the end of the day, it's majority. It's just the principle. It's a law that makes it work. That's all. It's just that simple. Don't make it anything more than that. It's really quite simple. Really quite simple. There's again groups, that's here. Okay, you got buyers and sellers. There's a group, so majority is always going to win. So who's in control? And you got to look for that in the chart. So yeah, so they made it. All right, so I hope that has helped you. Again, that's how I'm deriving that chart scale effect, is just again using the coin toss. That's it. A 50-50. If it's a game of chance, which I know it's not random. I can prove to you in so many ways that this stuff is not random. It's predictable to a certain degree. Of course, I don't want to say too much here because people might say no, no. It's just when you see that the things that I'm showing you, they're repeating. So if you go through all the videos, you'll see it's repeating the same things. Where there's some other repetitious behavior in this chart, it's a lot of it. Okay, and so it's not as random if you can see it. Okay, it's not to say it can't change. And see, and that's where the random element comes into play, because it can change at moments, but there's still quantifiable behavior, I would say, that I know is present. And if the public knew what they were actually looking at, they would absolutely say, yes, it's doing that, and it's always doing that. It's not going to stop. And so you need frequency, like the algorithms have. They have frequency. They can get in price levels milliseconds. And- but you need frequency as well, that the behavior is showing up very often, and that is high probability, so you can win each time that you interact with it, higher and higher odds than you wouldn't. Okay, so sometimes you will lose, but you want the odds to be in your favor, and so you don't need to have one or two occasional setups that would work. You need something that's always transpiring on the chart, and the chart is absolutely offering you frequency. You just got to know what to look for. I wish you all the best with your trading. Take care.